Hi there, welcome to Kneppy Invest. Apparently, we are now in a bull market. Well, NASDAQ is now in a bull market. In fact, it has risen about 20 to 23% over the past month and a half. I think at its top, it was a rise of 24%. And I'm starting to see a lot of people talk about, well, we're entering a new bear market or bull market. Now is the time to start buying. But I think we should be aware, we should be cautious because historically, in significant bear markets, there have been bear market rallies that were greater than 20%. In fact, in some of the bear market rallies, we have seen the index, whether it's the NASDAQ or Dow Jones, rise by about 40% or even over 40%. So we should still be cautious about the future of the indices moving forward because there's still a lot of uncertainty in regards to how the economies are going to perform, not only the next year, but in the next few years. So I think this little bout of optimism could be just that, just a short-term bout of optimism, and potentially this bull market or this burgeoning bull market could be very short-lived. And that's exactly what we saw in the Great Depression, exactly what we saw during the tech bubble burst, and exactly what we saw during the GFC. Now, to be honest with you, I don't really pay full attention to whether the market is in a bear market, bull market. I just look at whether the market is falling or rising. But I did notice that there was a Motley Fool podcast released on August the 12th that actually said we're in a new bull market. This week, the NASDAQ officially entered bull market territory. And when I listened to that podcast, I decided just to see what the feeling or the sentiment is like out there. And there is some news people, news organizations that are actually quite bullish right now. For instance, Fox Business, an article they wrote on August the 10th or released on August the 10th, titled NASDAQ Enters Bull Market, Exit Worst Bear Market Since 2008, was really bullish about the future. Wall Street Journal, the NASDAQ Composite is back in a bull market. The tech-focused index has risen more than 20% since mid-June, but is still down 18% this year. So a little bit less bullish than, say, the Fox Business News article. But out there were some news articles that were a little bit more cautious. And that is exactly what I am like right now. I'm a little bit more cautious. Just because the market or the NASDAQ has risen 20% doesn't mean we're back in a bull market. This could be just a bear market rally. And two of those articles that were a little bit more cautious were from The Economist and Market Watch. The Economist news article was titled, "A Fresh American Bull Market is Underway. Can it last?" That's a very pertinent question. Investors have been cheered by rosy economic news, and that was just really inflation wasn't as high as they anticipated. And actually, we did see the market rally on that, but I think with inflation still at 8.5%, it's way above what or where the reserve banks, the central banks in the world want it to be. So we need to see inflation fall significantly before I would define that as rosy economic news. And then the article from Market Watch was very cautious. NASDAQ bull market, question mark, a history of head fakes, says it's too early to celebrate. And that news article, that title is right on the mark. I do believe we have to be a little bit cautious. Let's not get ahead of ourselves thinking that we've just moved into a new bull market and it's just going to be all up from here, because history shows us this might not be the start of a bull market. So where are we sitting right now? And this is actually the NASDAQ up until the end of trading on Friday, the 19th of August. And the NASDAQ was down a fair bit, almost 2%, or maybe just on 2% for the day. So it looks like potentially, and just potentially at this point in time, this rally could be coming to an end. So from the top, we saw back in the end of 2021 to the bottom in June, the NASDAQ fell 34%. And so we have seen the NASDAQ rally 23, 24% from the bottom. And it does look quite positive. You can see I've included the 4 moving averages, which I just use as a guidance towards determining whether there is positive or negative sentiment in the market. So potentially we have seen a shift in sentiment and the trend in the market from negative to positive over the past few months. But we need to see that continue. What I'd like to see here is a little bit of a dip and then the market continued to go higher. And if the NASDAQ gets above about 13,800, that would be a good sign moving forward. And that would lead to me being more confident that this is a new bull market. I can't really say right now that this is a new bull market just because the market has rallied 20%, because the market fell 34% over about a 6 to 8 month period leading up to this bull market or potential bull market rise in the last few months. And to be honest with you, we've already seen a fairly significant bear market rally back in March and April. So the NASDAQ actually rallied about 18% in a very short period of time. And even back then, there were people suggesting that the market was going to keep going up from here. This was the end of the downturn. A lot of people were just looking back to what happened in March 2020, how there was a significant V-shaped recovery in the markets, and they thought this was going to be similar. But history again shows us that in every bear market, there's going to be significant bear market rallies of over 20%. So again, we should not be underestimating the impact of bear market rallies. And this could be right now just another one of these bear market rallies, and the market could fall significantly from where it is right now. Now let's go back into history. And one of my favorite sayings is history doesn't repeat, but it often does rhyme. I believe that was first stated by Mark Twain, more than likely over 100 years ago. So I think we can take a lot just from looking at what has happened in the past. So what I'm going to do is go back to 2008 during the GFC, back during the tech bubble burst in 2000, 2001, and back to the Great Depression. Of course, there was no NASDAQ back then, so have a look at the Dow Jones. So 3 cases where we did see significant bear market rallies of well over 20%. And then I'll talk about what happened after these bear market rallies. Then also look at an instance where there was a bear market and then there was a rally, and then that rally kept on going. That was in 2018, end of 2018 into the start of 2019. So let's go back to the GFC in 2008. This was in June 2008. We just seen the NASDAQ fall 32%, so fairly similar to the fall we have just seen now. And then the NASDAQ rallied 23%, very similar to the rally we have now. And back then, there were a lot of people who were saying this was the start of a new bull market. You can just see this looks fairly or eerily similar to what we're seeing now. And then, actually, I'll talk about this later, and then the market fell a significant amount from here. So this was not the start of a bull market. This was just a bear market rally. So again, you often see significant bear market rallies in bear markets, and that does not mean this is a start of a new bull market. Now on to the tech bubble burst back in 2000, and in fact the NASDAQ fell 40% from March to June of 2000, and then over a 3 to 4 month period after the bottom, which was reached towards the end of May, the NASDAQ actually rallied 42.8%. So the rally was actually greater than that initial fall in the NASDAQ. And more than likely, there would have been quite a few investors back then. And back in June 2000, I was a student back in upstate New York near Rochester, and I was not following the markets. I was not following what was happening in the NASDAQ or anything like that. I was just interested in learning all about meteorology. But more than likely, there would have been a lot of investors who saw that initial fall of 40%, saw this rally, who partook in this rally and started buying again because the NASDAQ rallied 42.8%. But over the next or following year, from August 2000 all the way through to August 2001, the NASDAQ actually dropped a significant amount. I'll talk about that drop later in the video. So just because the NASDAQ rallied after the initial drop doesn't mean this was a new sustainable bull market. Now let's go back to the Great Depression, and this is looking at 1929 and 30, and the initial drop in the Dow Jones, so back then it was the Dow Jones, the initial drop in the Dow Jones was 49%. Not sure if anyone out there who's watching this video has learned a lot about what happened during the Great Depression, particularly what happened with the Dow Jones, but there was that calamitous drop, that initial calamitous drop in the Dow Jones back in October 1929. It dropped 49% in a fairly quick period of time. But what you might not read about particularly if you haven't done any deep research, is there was a significant rally in the Dow Jones over the following 6 to 8 months. In fact, the Dow Jones rose 52% from November 1929 through to April, May of 1930. So there would have been, if we had social media back then in 1930, there probably would have been a lot of optimism back in 1930 because the Dow Jones looked like had moved into a new uptrend. There would have been positive sentiment, and it looked like the Dow Jones had moved into a new bull market. So there would have been a lot of people buying potentially back then, thinking because the markets only rise, this was a great time to buy. But the market fell a significant amount from April, May 1930 over the next 2 years. I'll talk about how much it fell later in the video. And that later in the video is right now. So be aware, just because you're getting these news articles that saying we have moved into, or the NASDAQ has moved into a new bull market, doesn't mean the market is going to keep on rising. There is that potential that this is just a bear market rally. We did see bear market rallies and fairly significant bear market rallies, 52% in the case of the Great Recession. And then once we saw that bear market rally come to a completion, we saw significant drops in these markets or these indices. In fact, in the Great Depression, from the top of that bear market rally, that looked like it could have been the new bull market, we saw the Dow Jones fall another 86% over a 2-year period. During the tech bubble burst, after that bear market rally of 42%, we saw the NASDAQ drop 74% in 1 year. And during the GFC, after that bear market rally, the NASDAQ fell another 50% over a 6-month period. So just be aware, just because you're getting these ideas that this is a new bull market, that you should go all in, spend all your cash, does not mean this is the start of a new long-term sustainable bull market. So just be aware, be cautious, don't deploy all your cash, in my opinion. That's just my opinion. You can do whatever you want with cash, but I do have a fair bit of cash. I have been deploying it on occasion, but I'm not fully invested right now because I think there is potential. We could see a significant downturn from here, but I just don't know. No one knows because there's a lot of uncertainty right now out there, not only in the markets, but also in the economies of the world. Now, I have shown you 3 examples of bear market rallies that were not sustainable. They did not turn into bear markets or bull markets, even though the bear market rallied over 40%. In the case of the Great Depression, that rally was 50%. And then we saw the Dow Jones fall another 80% after that rally. But that does not mean all these bear market rallies fail. On occasion, these bear market rallies actually do turn into bull markets. And that's exactly what we saw in early 2019 on the NASDAQ. So in late 2018, last 3 or 4 months of that year, the NASDAQ actually fell 23%. The reason the NASDAQ fell 23% was because the Fed decided to start raising interest rates, and the market absolutely hated that, particularly the tech-heavy driven NASDAQ. So that's why it dropped 23%. And then the Fed pivoted in early 2019, and instead of dropping or raising interest rates, they decided maybe we should drop interest rates. And that bear market rally, which did rise 20% in a very short period of time because of that pivot in the Fed, that kept on going. So that was a new bull market that lasted up until February 2020. So just because I've shown you 3 examples in the past of these bear market rallies that did fail, and then we saw significant drops in the market after that, doesn't mean that's going to happen this time around. We have seen instances in the past where it kept on, the market kept on going higher. But in my opinion, this is just my opinion, early 2019, or comparing early 2019 to now, or even to the Great Recession, Depression, the GFC, and also the tech bubble burst, is a foolish, is foolish because these are completely different scenarios. Back in early 2019 or late 2018, that was all about interest rates. Right now, we are dealing with inflation, and we are dealing with the ramifications of inflation. So a completely different scenario to what we were experiencing back in late 2018 early 2019. That's all I have for this video on this burgeoning bull market. Yes, the NASDAQ is up over 20% from its lows, but this does not mean we have moved into a new bear market. We need confirmation. Still time to be cautious right now, because we have seen in the past where these potential bull markets have just bear market rallies, and then we see further significant drops in the market. But there is a possibility that this could be the start of a bull market. But again, I would like to see confirmation around that. The very fact that the NASDAQ did drop 2% on Friday, the 19th of August, just near the top, is time, or probably is proof that we need to be a little bit more cautious right now. So what I'm doing is I'm not going all in. I do have cash set aside, and I'm just going to wait to see what's going to happen over the next few weeks. If I get confirmation that we are moving into a new bull market, I might deploy a little bit extra of my cash. But if not, I will stay on the sidelines, and then I'll focus on those really high quality companies, particularly if they start looking attractive. So for example, Alphabet, if that falls below $100, I might take a position in that company. If Amazon falls a significant amount, I might take a position in that company. Apple is another high quality company. Microsoft, those are sort of companies I would be looking at taking positions in, because those companies have significant moats. In fact, I'd say Google or Alphabet, Apple have some of the best moats we have ever seen in world's history. Now, if you totally disagree with me, if you think now is the time to go all in, this is the start of a new significant bull market, I'd love to hear your opinion and your reasons why you are thinking that way. Otherwise, then leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.